Hi everyone, today we'll be going over Specimen Paper for examination from 2023, and this is paper 1. So this is a multiple choice paper which consists of 30 questions, and we are also given a time limit of 1 hour. And in this video as well, we will be trying to solve all the 30 questions under our time limit, which is 1 hour. Now, without any further delay, let's get started. For the first question, in financial statements, inventories are valued at the lower of cost and net realizable value in the statement of financial position. Which accounting concept is being applied? All right, we're talking about inventories, right? And we know that inventories are assets. And we're talking about its valuation, whether it should be valued at the cost or net realizable value. And we know that we should always value it at the lower of cost and net realizable value. So we are trying to lower the value of our asset, right? And this is done so that we do not overstate our asset's value in the statement of financial position. So we just need to figure out which accounting concept is being applied. This is quite easy because we know that the accounting concept which states that our assets and income should not be overstated is the prudence concept, right? Let's have a look at the option. We can see prudence in our fourth option, which means that this is the correct answer, since prudence is the accounting concept which is being applied when we value inventories at the lower of cost and its net realizable value in the statement of financial position. All right, now we can move towards the second question. We need to figure out which statements describe the advantages of a computerized accounting system. So the very first one is that it allows for large amounts of data to be stored. This is true because if we're talking about our manual accounting system, then it means that we have to fill out the ledgers, right? And after one ledger completes, we need to get another one, which means that we need to have proper storage for all of the ledgers that we have completed. It's going to take a large amount, right? But in case of a computerized accounting system, all of those ledgers can be stored in one computer. So obviously it allows for large amounts of data to be stored. Then the second one is that mistakes in entering data are never made. That is not correct, because when we enter the data, that is the job of a person and not the accounting system or the computerized accounting system, which means that persons are vulnerable to mistakes, right? So there may be mistakes while entering data, even in a computerized accounting system. This is why our second statement is going to be incorrect. Then the third one is that the system can be installed with minimum cost. This is actually incorrect because computerized accounting system cannot be installed with minimum cost, as our computerized accounting system is quite costly. And the fourth one is that the trial balance always balances. This is true because whenever we talk about imbalances occurring in trial balance, it happens when we post incorrect amounts from our ledgers, right? But in case of computerized accounting system, whatever amount is present in the ledger will be posted to our trial balance, which means that there is not going to be any sort of error in the amounts, due to which our trial balance always balances, which means that our correct statements are going to be 1 and 4, and these are given in option B. So that's going to be our correct answer. Now we can move towards question number 3. What would be treated as part of the capital expenditure of the purchase of a building? So always remember that capital expenditures are those expenditures which only occur once, or they are non-recurring, right? So in order to figure out which of these should be treated as the capital expenditure of the purchase of a building, we just need to categorize it as a recurring expense or non-recurring one. Let's have a look. The first one is the cost of purchase. Obviously, this does not occur more than once because once we purchase it, we do not have to purchase it time and again, right? So this is to be included in the capital expenditure. Then the second one is the installation of air conditioning needed for the machinery in the building. Again, once installed, the air conditioning does not need to be installed time and again, which means that this is also to be included in our capital expenditure. The third one is insurance of the building. But remember that when we get our building insured, we need to pay the premiums time and again, which means that this is a recurring expense, due to which it should not be included in our capital expenditure of the purchase of a building. So that's 1 and 2, and it is given in option B. That is going to be the correct answer. Now we can move towards question number 4. The table shows parts of the statement of financial position of a business. We are given the non-current assets at its cost. We are given the accumulated depreciation and the net book value for 2 years, 2020 and 2019. Then we are also given other information for the financial year 2020. We are given the depreciation charge for this year, new non-current assets purchased, and this is the cost. Then we have the loss on sale of non-current assets. All right, so we need to figure out the amount which was received from the sale of the non-current assets, which means that we need to figure out the value for our sales proceeds. Okay, whenever we try to figure out the sale proceeds, we require the net book value of the assets that is being sold. And in order to figure out the net book value, we require the cost and its accumulated depreciation. So the very first step would be to figure out the cost of that non-current asset which is being sold. All right, so we can prepare a statement for these 2 years, because if you look at the cost of the non-current assets for the year 2019, if we add all of the new purchased non-current assets value to it and subtract all of the cost of the disposed assets, then we get the non-current assets at cost for the year 2020, right? So let's do that. We're going to start with this value, the non-current assets at cost for the year 2019. So that's going to be 190,000. Then we are going to add the cost value of all of the new non-current assets that was purchased in the year 2020, which is given right here. And it has the value 105,000. Then we need to subtract all of the cost of the disposed assets, right? So this is the cost of the disposed non-current asset. Then we get our value for the cost of the non-current assets at the year 2020, and it is given to be 245,000. Now we can easily figure out the cost of the disposed non-current asset by solving this equation. So the cost is just going to be 190,000 plus 105,000 minus 245,000. And this results in our cost to have the value of 50,000. All right, then the next step would be to figure out our accumulated depreciation, right? And we will create a similar equation from these values. So we'll be starting with the accumulated depreciation for the year 2019. Then we're going to add the depreciation charge for the year 2020. Then we're going to subtract the accumulated depreciation on the disposed non-current assets, which gives us the accumulated depreciation value for the year 2020. Let's start with our value for the year 2019, that's 75,000. Then we will add the depreciation charge for the year of 2020, which is given to be 40,000. Then we can subtract our accumulated depreciation of the disposed non-current asset. And this gives the total accumulated depreciation for the year 2020, which is given to be 90,000. Now we can easily figure out the accumulated depreciation value. That is just going to be 75,000 plus 40,000 minus 90,000, which results in the accumulated depreciation value for the disposed non-current asset to be 25,000. Now the next step would be to figure out our net book value. And we know that net book value is just the difference between the cost and our accumulated depreciation, and we just figure out the value for cost as well as the accumulated depreciation. Let's substitute it. We can see that the cost was 50,000 minus the accumulated depreciation, which was 25,000. Then this gives our net book value to be 25,000 as well. All right, then we are also given that there was a loss on the sale of non-current assets, right? And this loss is of 10,000. And loss occurs when our net book value has a higher value than the sales proceeds, which means that loss is going to be equal to net book value minus the sale proceeds. Now we can substitute the values for loss and net book value. We have our loss to be 10,000, and we just figured out our net book value to be 25,000 minus the sales proceeds. Now we can easily figure out the value for sales proceeds. That is just going to be 25,000 minus 10,000, which results in the value of 15,000. So this is the correct answer, and it is given in option A. All right, now we can move towards question number 5. A business has a financial year end of 31st December. It purchased a motor vehicle on 1st January 2017 for 24,000. So this is the cost. Then the estimated useful life of the motor vehicle was 4 years. The estimated residual value at the end of the 4 years was 8,000. Then the business depreciates motor vehicles at 25% per year using the reducing balance method. And under reducing balance method, the depreciation is calculated by applying the rate to its net book value rather than the cost. Then no depreciation is charged in the year of disposal. The motor vehicle was sold on 31st July 2020 for 12,000. We now need to figure out the profit on the sale of the motor vehicle. Okay, I'm just going to create a timeline here. We know that we purchased the motor vehicle on 1st January 2017. Okay, so our first year is 2017. Then we have 2018, 2019, and 2020. And we are told that the motor vehicle was sold on 31st July 2020, which is somewhere here, right? So here we sold the vehicle. And we are also told that no depreciation is charged in the year of disposal, which means that we do not need to calculate the depreciation for these 6 months, right? We only need the depreciation for the year 2017, 2018, and 2019. And we need to figure out the profit on sale of the motor vehicle, which means that we need to figure out the net book value of the sold motor vehicle. And in order to figure out its net book value, we require the accumulated depreciation, due to which we will be calculating these depreciations. Okay, let's start with the year 2017. So depreciation for 2017. We know that we will be applying the reducing balance method, and in this method we apply the rate to its net book value. But since we're talking about the year of acquisition, there is not going to be any sort of accumulated depreciation, due to which its net book value is going to be equal to its cost. So we can just apply the rate to its cost, which is 24,000. Let's do that. So that's 24,000 times our rate, which is 25%. We can write it down as 0.25, which gives the depreciation for the year 2017 to be 6,000. Now we'll be figuring out the depreciation for 2018. And now we can write down its net book value, right? Because we already have the depreciation for previous year, which is going to act as the accumulated depreciation for the year 2018. So our net book value is just going to be the cost, 24,000, minus previous year's depreciation, which is 6,000. And now we can just apply it with the rate of 25%. And this gives the depreciation charge for the year 2018 to be 4,500. Now we repeat the same process for the year 2019. We have our cost 24,000, and the previous year's depreciation is going to be 6,000 as well as 4,500. So that's minus 6,000 minus 4,500 times our rate of 0.25, which gives the depreciation charge for the year 2019 to be 3,375. Now the sum of these three values of depreciation is going to be the accumulated depreciation. So our accumulated depreciation is just going to be 6,000 plus 4,500 plus 3,375, which is 13,875. All right, now the next step would be to figure out the net book value. And net book value is just the difference between the cost and accumulated depreciation. We have our cost to be 24,000, and we just figured out the accumulated depreciation to be 13,875, which gives the net book value to be 10,125. All right, now we just need to compare this net book value to the sale proceeds, which is given to be 12,000. We can see that the net book value is lower than the sale proceeds, which results in a profit, right? And profit is just the difference between sale proceeds and the net book value. So we're given the sales proceeds to be 12,000. Then we just figured out our net book value to be 10,125, which gives our profit on the sale of the motor vehicle to be 1,875. This is our correct answer, and this is given in option A. Now we can move towards question number 6. A business's suspense account appears as follows. We need to figure out which of the statements are correct. The first one is the salaries account had been overcast by 150. Okay, remember that we have our suspense account balance of 100, and now we are correcting it here. And while correcting, the overcasts are always recorded on the same side on which that item would be appearing in our trial balance, whereas the undercast is going to be posted to the opposite side in which that item will be appearing in the trial balance, right? So we're talking about salaries here, which is an expense, and expenses are always recorded on the debit side. And we're talking about overcast of 150, which means that the correction of this would be salaries on the debit side with the amount 150. And we can see here that salary is on the debit side with the same amount of 150, which means that this statement is correct. Then the second one is the sales account had been overcast by 50. So we know that sales is a sort of income which will appear in the credit side of our trial balance, right? And overcast, which means that the correction of this would result in our sales to be on the credit side with the amount of 50. Let's have a look above. We can see that sales is on the credit side with the same amount of 50, which means that this statement is also correct. And the third one is that total debits had been 100 less than total credits in the trial balance. If this was the case, then our opening balance would result on the debit side, right? But let's have a look above. We can see that our opening balance is on the credit side, which means that this statement is incorrect. So only correct ones are 1 and 2, which is given in option A. So that's going to be our correct answer. Now we can move towards question number 7. In statement of profit or loss, so this is basically our income statement, carriage outwards of 5,000 had been treated as carriage inwards, and carriage inwards of 3,000 has been treated as carriage outwards. And we need to figure out the effect these errors have on the profit. So we're talking about the gross profit as well as the profit for the year. Let's talk about profit for the year first. We know that while figuring out profit for the year, we subtract our carriage outwards as well as the carriage inwards, because both of these are the costs or expenses which needs to be subtracted in order to figure out the profit, which means that it does not matter whether we treat our carriage outwards as carriage inwards and our carriage inwards as carriage outwards in the case of profit for the year, because both of these amounts of 5,000 and 3,000 is going to be subtracted no matter what item we treat it as, right? Due to this, we get no effect on the profit for the year regardless of its treatment. So that's going to be no effect for profit for the year. Now let's talk about the gross profit. So in gross profit, we only treat our carriage inwards as expense, as a cost of sales, right? Which means that we need to subtract carriage inwards. So the correct subtraction would be the amount of 3,000, because that is the correct balance of our carriage inwards, right? But we treated carriage outwards as carriage inwards, which means that we actually subtracted 5,000 instead of 3,000. So instead of subtracting only 3,000, we subtracted 5,000, which means that we also subtracted additional 2,000 as our cost, which means that our gross profit has been deducted by additional 2,000. And deduction would obviously result in an understatement, which means that our gross profit is being understated by the amount of 2,000. And that is given in option C. And both of option C's items are correct for gross profit as well as profit for the year, which means that this is going to be the correct answer for question number 7. Now we can move towards question number 8. A bank statement shows a credit balance of 1,500 and a payment of 500 and a receipt of 1,250 were included in the cash book but have not yet appeared on the bank statement. Then bank interest payable of 1,100 had been correctly recorded in the cash book, but due to a bank error had been recorded in the bank statement as 1,000. We now need to figure out the cash book balance. Okay. The thing to remember here is that the bank statement balance and cash book balance should be equal, right? So in order to figure out the cash book balance, we can do it via creating our bank statement. So I'm going to use that approach. So this is our bank statement. This is the debit side and the credit side. And remember that in a bank statement, the debit side always represents all of the outflows and credit side always represent all of the inflows. All right. And we are given the credit balance of 1,500. So this will be on the credit side. All right. Then we were told that there was a payment of 500 and receipt of 1,250, which have not yet appeared on the bank statement. So now we need to include this in our bank statement. We're talking about payment. So obviously that is going to be an outflow, right? And outflows are to be recorded on the debit side, which means that this 500 will appear on the debit side. Then we have a receipt of 1,250. Receipt obviously is an inflow, which means that this amount of 1,250 should be recorded on the credit side. So that's going to be 1,250. Then we have bank interest payable of 1,100 had been correctly recorded in the cash book, but due to a bank error, it had been recorded in the bank statement as 1,000. All right. So we have bank interest payable, which means that this is an outflow. This is the interest that we need to pay to the bank, right? And it was already recorded in our bank statement as 1,000, which is an error. It should have been actually 1,100. So we've already recorded the outflow as 1,000, right? And that is an error. So we have 1,000 on the debit side, but it should have actually been 1,100, right? So in order to correct this error, we just need to cancel out the 1000 first, which we can do by entering 1000 on the credit side as well, because debit and credit are basically the opposites and they cancel each other out. Then we need to enter another 1100 on the debit side, right? So we need to do this process because this 1000 has already been entered in our bank statement. So now we're going to correct it by entering 1000 onto the credit side so that it cancels with the incorrect amount of 1000 on the debit side. Then we enter the correct amount of 1100 on the debit side. Okay, these are all of our transactions. So now we can just total it and figure out the correct balance. We can definitely see that the credit side is the heavier side. So let's figure out the total by adding these three amounts. That's 1500 plus 1250 plus 1000, which results in 3750. This is going to be the total for debit side as well. And now our balance is going to appear as the balancing figure on the debit side. And whenever we're trying to figure out the balancing figure, we just need to subtract these amounts from the total. In this case, that's going to be 3750 minus 500 minus 1100, which results in our balance to be 2150. So this is the correct balance in our bank statement, which means that this is also going to be the correct cash book balance. So this is our answer and it's given in option C. Now we can move towards question number 9. In which book of prime entry is the contra between the sales ledger control account and the purchase ledger control account recorded? Okay, so the first thing to understand here is what is contra. Let's suppose there are two people, A and B, and A sold some goods to B, which is worth 2000. And B also sold some goods to A, goods worth of 1000. Now both the parties sold 1000 goods worth to each other, right? So instead of paying each other 1000, they could just treat it as contra and say that only B now owes A the remaining 1000 balance, because 1000 we treat it as a contra, which means that the remaining balance that B owes A is going to be 1000 now. So such a transaction is known as contra. Now we just need to figure out the book of prime entry where the contra is recorded. So the very obvious choice is that these transactions would be recorded in our general journal, right? So that would be the correct answer, which is given in option B. Let's have a look at the remaining options as well. The first one is cash book, and cash book only records the cash inflows and outflows, which means that this is not going to record the sold transactions or the purchase transactions from our supplier, right? Which means that this is going to be incorrect. The third one is purchases journal. It only shows the purchased value from our supplier and it does not show the sold value, due to which the contract cannot exist, right? So C is incorrect. And the same applies to D as well, because it only records the sold transaction and not the purchase transaction, due to which the contract cannot exist. All right, now we can move towards question number 10. A bookkeeper reconciles the control accounts with the sales and purchase ledgers, and we need to figure out which errors are identified in this way. The very first one is a figure was transposed when copied from a book of prime entry to a personal account. So this just means that suppose the book of prime entry has the amount of 850, and while transposing it to a personal account, we actually switch the amount. So that's an error, right? So we switched it and wrote 580. So these sort of errors can definitely arise, right? And these errors can be identified by comparing our control accounts with the sales and purchases ledgers, because from the book of prime entry we purchase our control accounts, and from the personal account we prepare our ledgers, right? Due to which this error can be identified. So that is true. The second one is an incorrect amount was entered in a book of prime entry. All right, so this is an error of original entry which cannot be identified by reconciling the control accounts with the sales and purchases ledgers, because whenever we enter an incorrect amount in the book of prime entry, that very same incorrect amount will be recorded in the personal account, which means that these amounts will be reflected in our control accounts as well as the ledgers. So even though the amounts are incorrect, both of the control accounts as well as the ledger account is going to have the same value, due to which we cannot identify any sort of errors. So errors of original entry are not identified. This is incorrect. Then we have a total in a book of prime entry was incorrect. This is true because, like I said before, if there is an error in the total of prime entry, then personal account is going to reflect the ledgers, whereas the book of prime entry is going to be reflected in the control accounts, due to which reconciling these two accounts will give rise to an error, right? So 3 can be identified. Then the last one is a transaction which was omitted from a book of prime entry. Again, this is an error of omission. So any transaction that has not been recorded, we cannot identify that error by comparing the control account and the ledger accounts. So 4 is incorrect as well. The only correct errors are 1 and 3, which is given in option C. So that will be our correct answer. Now we can move towards question number 11. The draft profit for the year for a sole trader was 108,000 before the following were taken into account, and we now need to figure out the correct profit. So I'm going to start with the draft profit of 108,000. Okay, then an accrual of 600 for repairs, so repairs is an expense, had been treated as prepayment. Okay, so let's write down its treatment as a prepayment. So we're talking about expense, which means that it should be definitely subtracted in order to figure out the profit for the year. And if we're talking about prepayment, it means that this is an expense for the next year, which should not be included in this year. So we just need to deduct it, right? So that's another negative, which means that we actually added this amount of 600 as treatment as prepayment. Now let's talk about its treatment as an accrual. We're again talking about an expense, so that's a negative. But if it is an accrual, it means that those expenses are yet to be paid, but that is incurred in this particular year, which means that it should be included while calculating the profit for the year. So inclusion is a plus, which means that that is a negative 600. So it actually should have been minus 600, but we wrote plus 600. So in order to get this value to this, if we subtract 600 once, then it gets cancelled out with the added 600 before, which means that there is no extra negative 600 to reflect the accrual of 600 for repairs, which means that we again need to enter another 600. So that's negative 600 and another negative 600. Let's write it down. Then the second one we have is the depreciation of non-current assets which had been undercharged by 2,000. We're talking about depreciation, which is again an expense. So that needs to be deducted in order to figure out the profit for the year. Then we have undercharged. Whenever something is undercasted, we need to add it back, right? So that's a plus. So that's plus, which means that negative and a positive results in a negative. So we just need to subtract this 2,000 in order to figure out the correct profit. Let's do that. That's negative 2,000. Then the last one we have is the allowance brought forward for irrecoverable debts was 1,850. So this just means that this is a provision for doubtful debts brought forward, which means that this is the opening balance for provision for doubtful debts, and the allowance to carry forward should be 2,250. Carry forward just means that this is the closing balance for the provision for irrecoverable debts. Okay, and we can see that the closing balance is higher than the opening balance, which results in an expense. An expense is just going to be the difference between the closing balance and the opening balance. In this case, that's going to be 2,250 minus 1,850, which results in the value of 400. So this expense should be treated in order to figure out the profit. And we know that expenses are always subtracted, so we just need to subtract this 400 as well. Okay, so this gives our correct profit for the year to be 108,000 minus 600 minus 600 minus 2,000 minus 400, which results in 104,400. And this amount is given in option A, so that's going to be the correct answer. Now we can move towards question number 12. A company received interest of 8,800 during the financial year. Interest of 700 was due to be received at the beginning of the year and 850 at the end of the year. We now need to figure out which entry appeared in the interest received account to make the transfer to the statement of profit and loss. Again, the statement of profit and loss just means income statement, so we just need to figure out the entry that is to appear at the interest received account. Okay, let's figure out the amount first. We will start with the amount received, that's 8,800. Then we have interest of 700 due to be received at the beginning of the year. So this was due at the beginning of the year, which means that interest of 700 has actually incurred in the previous year, but it was not received yet, which means that this is an income of the previous year, which should not be included in this year's income statement. So I'm just going to deduct it. Then we have 850 due at the end of the year, which means that this is the interest incurred in this particular year, which have not been received yet, but it should be included in the income statement, right? So I'm just going to add that amount of 850. which gives our interest received amount to be 8,800 minus 700 plus 850, which results in 8,950. Now, this is the interest received, right? And interest received is definitely an income, and incomes are always credited in our income statement, right? But we're talking about the entry in the interest received account to make the transfer to the statement of profit or loss, which means that this is just going to be on the opposite side in our interest received account. That's the debit side. So our correct answer is going to be 8,950 on the debit side in our interest received account. This value is given in option D. That will be the correct answer. Now we can move towards question number 13. Katrina started a business on 1st January 2020. For the year ended 31st December 2020, the following information was available. We're given the drawings, profit for the year, revenue and expenses, and we need to figure out the cost of sales. Okay, let's write down the income statement format, but in an equation. So we start with the revenue, we subtract all of our cost of sales, then we subtract all of our expenses, which gives us the profit for the year, right? We have the revenue value, we have our expenses value, and we have the profit for the year value as well. So we can just substitute it. Let's do that. We have the revenue of 1,500,000. We need to figure out our cost of sales. We have our expenses to be 875,000. And we also have the profit, which is 62,700. Now we can easily figure out the value for cost of sales. That's going to be 1,500,000 minus 875,000 minus 62,700, which results in the value for our cost of sales to be 562,300. And this value is given in option A, so that's going to be the correct answer. We can now move towards question number 14. We need to figure out what are the advantages to a sole trader of forming a partnership. The very first one is that losses can be shared by all partners. This is true because being a sole trader, you have all of your investment, whereas you also need to bear all of the losses, right? But in case of partnership, we can share the losses among all partners on different profit or loss sharing ratio, right? So that's definitely an advantage. The second one is more capital may be available to the business. That is again true because when you're a sole trader, only you invest in that particular business. But if we're talking about partnership, there may be multiple people investing into the business, due to which more capital will be available. Then the third one is profits will be greater than those of a sole trader. This is not true because profit can be greater or it can be lower as compared to a sole trader. We cannot really tell it. So that's going to be incorrect. Then the fourth one is there may be disagreements between partners. So this statement itself is correct, but we're trying to figure out if it is an advantage to a sole trader. And we're talking about disagreements between partners, which may delay decision-making process, right? So that's definitely not an advantage. That is actually a disadvantage. And this is not to be included. So the only correct items are 1 and 2, which is given in option A. That's the correct one. Now we can move towards question number 15. Smith and Jones are in partnership, sharing profits and losses in the ratio 3:2 respectively, which means that out of 5 parts, 3 parts belongs to Smith and 2 parts belongs to Jones. Then profit for the year was 152,000. Smith was charged interest on drawings of 1,650 and Jones had a partnership salary of 40,000. We need to figure out Smith's share of the residual profit. Okay, so the first step would be to figure out our residual profit from profit for the year. We start with 152,000. This is basically the appropriation account. Then we know that Smith was charged interest on drawings of 1,650, and interest on drawings is something that the partnership receives, which means that it should be added to the profit for the year. So that's plus 1,650. Then we have partnership salary to Joan of 40,000. And remember that salary is something that is to be paid to the partners by the partnership, which means that this reduces our residual profit. So I'm just going to subtract the 40,000. And this gives our residual profit. So the residual profit is going to be 152,000 plus 1,650 minus 40,000, which results in the value of 113,650. And we now need to figure out Smith's share of the residual profit. So we have the total residual profit of 113,650. And according to the profit sharing ratio, we know that only 3 parts out of the 5 parts belongs to Smith. So that's going to be times 3 out of 5. So Smith's share of the residual profit is going to be 113,650 times 3 by 5, which results in 68,190. This is the correct answer and it is given in option B. So that's the correct one. Now we can move towards question number 16. There are 3 partners in a partnership. The total of their current accounts at the start of the year was 18,000 and at the end of the year is 32,000. The total drawings for the year amount to 22,000 and total of partners' salaries are 13,000. We need to figure out the profit for the year. Okay, so I'm just going to create the current account. This is the debit side, this is the credit side. We have our opening balance to be 18,000 and this is on the credit side. Then we have the closing balance, which is at the end of the year, to be 32,000. This should be on the debit side. Then we are also told that the total drawings amount to 22,000. And remember that drawings are something that needs to be paid to the partnership, which means that drawings should be kept in the debit side in our current account, right? So that's 22,000. Then we have partner salaries of 13,000. And this is something that the partnership needs to pay to the partners. So this comes in our credit side. That's 13,000. Then we also have our residual profit, which is something that the partnership needs to give out to the partners, due to which it also falls under the credit side, right? Now we can just total and figure out our residual profits value. So let's total the debit side. That's 22,000 plus 32,000, which results in 54,000. This is going to be the total for credit side as well. And our residual profit acts as a balancing figure. And whenever we're trying to figure out the balancing figure, we just need to subtract these values from the total. And in this case, that's going to be 54,000 minus 18,000 minus 13,000, which results in 23,000. Now, the thing to remember here is that we just figured out the residual profit, but we are asked the profit for the year, right? And profit for the year, after subtracting all of our salaries and adding all of the interest on drawings and subtracting all of the interest on capitals, we then finally get the residual profit. And in this case, there is no interest on drawings and interest on capitals. There is only partnership salaries. So we need to subtract this in order to get our residual profit, which we just figured out to be 23,000. Now we can easily solve this equation and figure out the profit for the year. That is just going to be 23,000 plus 13,000. Which results in the value of 36,000. This is the correct answer and this value is given in option D. Now we can move towards question number 17. Which statements about rights issues is correct? The first one is that these shares can be offered to anyone. That is incorrect because rights shares can only be offered to the existing shareholders. The second one is that these shares can only be offered to existing shareholders. That is true. Then we have these shares cannot be sold at a premium. That is incorrect because we can issue rights share at a higher value than our nominal rate. And finally, we have these shares cannot be sold at less than the market price. Again, this is incorrect because we can sell the rights shares at a price lesser than the market price, which means that our correct answer is going to be B. Now we can move towards question number 18. A company's profit from operations has increased by 10% in a year, whilst its gross profit has only increased by 5%. Alright, which factors could explain this? So remember that profits from operations is just the gross profit minus all of the expenses, right? So for profit from operations as a whole to increase, we require the positive aspects to increase. So we require our gross profits to increase, or we require our expenses to decrease. So we're looking for this. And for gross profit, that's just the revenue minus cost of sales. And for gross profit to increase, we require the positive aspect, which is the revenue to increase, and the negative aspect, which is the cost of sales to decrease. So we're looking for these. The first one is a decrease in distribution cost. So distribution cost is an expense, right? And we require our expenses to decrease, which is the case given here. So this is the factor that could explain it. The second factor we have is a decrease in finance costs. Okay, but remember that finance cost is only used in order to figure out the profit for the year, as we subtract our finance cost from profit from operations. But we're only talking about profit from operations here, which means that a decrement or increment in finance cost has no effect in our profits from operations. So the second factor cannot explain the condition given in the question. The third one is an increase in rent received. Okay, remember that rent received is an income. And incomes are added to the gross profit, right? And we know that for the entire factor to increase, all of our positive aspects should increase as well. So the increment in incomes can result in an increment in profit from operations. And we are given an increment in this as well, which means that this is a factor that could possibly explain the condition in the question, right? This is true. Then the last one we have is an increase in selling prices. Okay, this might be a bit confusing. We're talking about the total revenue, but this is the individual selling price, right? So individual selling price can drive down the demand, which could drive down the total revenue as well, right? So that is not sure. We're not sure whether the total revenue is going to increase or decrease, due to which this cannot be a possible factor explaining the condition given in the question. The only correct ones are 1 and 3, which is given in option B. That's the correct one. Now we can move towards question number 19. A trial balance at 31st December 2020 showed the following information, where given the ordinary share capital as well as the retained earnings value. On 1st January 2021, the directors created a general reserve of 70,000. Remember that general reserve is created from the amount in our retained earnings. So basically, in order to create the general reserve of 70,000, we subtract 70,000 from retained earnings, which means that we take 70,000 from retained earnings and create a separate reserve called the general reserve by putting that 70,000 in that particular reserve. Then at the same time, 200,000 ordinary shares were issued for 300,000. But remember that our nominal rate was only $1, which means that the ordinary shares will only be increased by 200,000 times 1, which is again 200,000. And the remaining value will go towards our share premium. So that's going to be 300,000, which is the total value minus our ordinary share value, which results in our share premium to have the value of 100,000. Now we need to figure out by which amount did the total reserves increase on 1st January 2021. And remember that total reserves comprises of our capital reserve and revenue reserve. And capital reserves are the share premium, whereas revenue reserves are the retained earnings, general reserve, and our revaluation reserve. Okay, so let's just add the values. We figured out that our share premium has the value of 100,000. Then we have our retained earnings of 300,000. But we took out 70,000 in order to create the general reserve. So that's minus 70,000. And then we created the general reserve worth 70,000. So that's plus 70,000. And we're not given any information regarding revaluation reserve. So we can just completely ignore this for now. Which means that our total reserves now is going to be 100,000 plus 300,000 minus 70,000 plus 70,000, which results in 400,000. And we're asked the increment in the total reserve. So previously, our total reserve was just the retained earnings with the value 300,000, whereas now our total reserve is 400,000. So the increment is just going to be the difference between these two values. That's new value of 400,000 minus the previous value of 300,000, which results in 100,000. So this is the correct answer, and this is given in option A. Now we can move towards question number 20. The following information is given in the financial statements of a limited company. We need to figure out the value of the total equity. So equity consists of our ordinary shares, share premium, general reserve, revaluation reserve, and retained earnings. Okay, we have our ordinary shares, so this should be included. That's 1,200,000. Then we have our general reserve, which is to be included in equity, right? So we need to add this value as well, 120,000. Then we have retained earnings, which is again a part of equity. So we need to add its value of 710,000. And the final one we have is debentures. And remember that debentures are the non-current liabilities, which is not included in our equity. So we can just completely ignore this. So the total value of the equity is going to be 1,200,000 plus 120,000 plus 710,000, which results in 2,030,000. This is the correct answer, which is given in option B. Now we can move towards question number 21. The table shows year-end information for a company. We're given the statement of profit or loss, which is basically our income statement, and the statement of financial position. Okay, and now we need to figure out the return on capital employed. So the return on capital employed formula is profit from operations divided by capital employed times 100%. Let's have a look here. We're given profit from operations right here, so we can just substitute its value of 14,000. Then we need to figure out the value for our capital employed. And remember that capital employed is just the sum of equity and our non-current liabilities. And equity consists of ordinary shares, share premium, general reserve, revaluation reserve, and retained earnings, and plus our non-current liabilities. Let's do that. We have our 5% debenture, which is a non-current liability, right? It should be included in our capital employed. So let's add 30,000. Then we have ordinary share capital, which is again a part of capital employed, right? So that's plus 70,000. Then we have share premium account, which is again to be included in our capital employed. So that's plus 15,000. And the last one we have is retained earnings, which is also a part of equity, which is a part of capital employed. So we need to add its value of 35,000 as well, which means that the total capital employed is going to be 30,000 plus 70,000 plus 15,000 plus 35,000, which is also in the value of 150,000. Let's substitute this value into our formula. So now our return on capital employed is going to be 14,000 divided by 150,000 times 100%, which results in 9.3%. This is the correct answer, which is given in option C. Now we can move towards question number 22. A company provided the following information. We have revenue for the year-end non-current assets at cost, year-end accumulated depreciation. And we need to figure out the non-current asset turnover. And the formula for non-current asset turnover is just the revenue divided by the net book value of our non-current assets. And we already have the revenue for the year to be 390,000. Let's figure out the net book value. We know that the formula for net book value is cost minus accumulated depreciation. And we're given the cost right here. So this is the non-current assets at cost, 260,000, minus our accumulated depreciation, which is given right here to be 65,000. Which means that the net book value for the non-current assets is going to be 260,000 minus 65,000, which is 195,000. Let's substitute this value. And this gives the non-current asset turnover to be 390,000 divided by 195,000, which is 2 times. This is the correct answer, which is given in option D. Now we can move towards question number 23. A garage owner paid the following costs, and we need to figure out which of these are direct costs. Okay, the first one is garage equipment repairs. So this is basically our machinery repair cost. And machinery repairs are the indirect cost, not the direct costs, right? So this should not be included. The second one is mechanics wages. So this is the wages paid to employees for their work in factory, if we're talking about relating it with the factory costs that we normally talk about, right? And wages are always a direct cost, which means that the mechanics wages in this case is also going to be included as direct cost. Then the third one is rent paid for garage premises. Rent paid is basically equivalent to factory rent. And factory rent is always categorized as indirect cost, which means that in this case, our rent paid for garage premises is also going to be categorized as indirect cost, so this should not be included. Then the fourth one we have is spare parts used to repair vehicles. This is basically equivalent to our direct materials used while producing final goods in our factory. As we're talking about garage, so spare parts is basically their direct materials involved, which means that this should also be part of the direct cost. So number 4 is included. The only items included are 2 and 4, which is given in option D. So that's the correct answer. Now we can move towards question number 24. A business provided the following information. We are given the number of labor hours for the month of February and March along with its total overheads. We now need to figure out the monthly fixed overhead cost. Okay, remember that there are 2 types of overheads, variable ones and the fixed ones. So let's create an equation for these 2 months. For February, we have 64,000 hours. And associated with it will be the variable cost per each labor hour. Then we have fixed cost, which gives our total overheads. For February, that's 918,000. We repeat the same process for the information for March. We are given the number of labor hours to be 76,000 times variable cost plus fixed cost gives the total overhead to be 1,062,000. Now I'm just going to subtract the second equation from the first one. That's 64,000 minus 76,000, which results in negative 12,000. Times variable cost, the fixed costs cancel each other, and that gives 918,000 minus 1,062,000, which results in negative 144,000. So our variable cost is just going to be negative 144,000 divided by negative 12,000, which results in 12. Now we can just substitute this value for variable cost in any one of these two equations in order to figure out the fixed cost value. I'm going to input it in the second one. So that's going to be 76,000 times the variable cost, which we just figured out to be 12, plus fixed cost equals to the total overhead of 1,062,000, which means that the fixed cost is just going to be 1,062,000 minus 76,000 times 12, which results in the value of 150,000. This is the correct answer, which is given in option B. Now we can move towards question number 25. What is the reason for calculating an overhead absorption rate in a manufacturing business? So we calculate an overhead absorption rate under absorption costing, right? And in absorption costing, what we do is that we allocate the overheads for service departments to our production departments so that those can be apportioned to per unit of the product. In other words, we just need to calculate the cost per unit by also apportioning all of the costs associated with the service departments to each of the unit produced by allocating it or reallocating it to our production departments. So that is the basic reason. Now we're just looking for that among these options. So the very first one is to control overhead expenditure. That is not true, so that's incorrect. The second one is to determine whether or not a supplier is overcharging. Again, that is incorrect. That's not the correct reason. The third one is to enable overheads to be apportioned to cost centers. That is again incorrect. We actually need to reflect it per unit, right? The last one is to establish costs per unit of a product, which is the true reason. That will be the correct answer. Now we can move towards question number 26. Budgeted overhead expenditure was 180,000 and budgeted labor hours was 12,000. Actual overheads amounted to 196,000 and actual labor hours were 12,200. Now we just need to figure out the underabsorption or overabsorption of overheads. Okay, whenever we figure out the underabsorption or overabsorption, we basically just compare the budgeted overhead expenditure with the actual overhead, but the basis should be the same. And in this case, our basis is labor hours, right? But for actual, we have the labor hours of 12,200, whereas the budgeted labor hours is 12,000. So we need to change it, right? For 12,000 hours, we have our budgeted overheads to be 180,000. We now need to figure out the budgeted overhead expenditure based on 12,200 hours. So let's utilize our unitary method. For 1 hour, that's going to be 180,000 divided by 12,000, which means that for 12,200 hours, that will be 180,000 divided by 12,000 times 12,200. Okay, and this gives our budgeted overhead expenditure based on 12,200 hours to be 183,000. Now let's compare it with the actual overheads. That's 196,000. We can clearly see that the budgeted one is less than the actual one. And this is the case for underabsorption. So let's figure out the amount. The amount is just going to be the difference between actual overhead and the budgeted one. In this case, the actual overhead is 196,000. We just figured out our budgeted overhead to be 183,000, which gives our underabsorption amount to be 13,000. So the correct answer is going to be 13,000 underabsorbed, which is given in option D. So that will be the correct answer. Now we can move towards question number 27. Why might a business use marginal costing? So remember that in marginal costing, we categorize our cost as variable cost and fixed cost, which makes it easier for us to calculate our contribution, right? And the first reason given here is to calculate break-even units. Remember that the break-even units formula is just fixed cost divided by contribution per unit, which utilizes contribution, right? Which means that this definitely utilizes marginal costing method. So number one is true. The second one is to decide on the most profitable use of limited resources. Remember that in case of figuring out the most profitable use of limited resources, we figure out contribution divided by the limited resources required for each different product, which means that this obviously utilizes marginal costing as well. So the second one is correct. The third one is to decide whether to make a product or buy it. Again, in order to figure out whether to make a product or buy it, we compare the contribution, which is again something that is calculated under marginal costing. So number 3 is correct as well. And our correct answer comprises of 1, 2, and 3, which is given in option A. So that's the correct one. Now we can move towards question number 28. How is margin of safety calculated? Okay, so the formula for margin of safety is just going to be actual sales minus actual break-even sales. We're just looking for this one, and that is given in option A. That's the correct answer. Now we can move towards question number 29. A business manufactures and sells a single product. The following information is available. So for this year and estimated next year. And the profit for this year is 20,000 based on these values. Now we just need to figure out how many units must be sold to achieve the same profit next year. Okay, so the number of units times contribution minus fixed cost results in the profit, right? We need to figure out this. So number of unit, then the contribution based on the estimation for next year. The contribution is just the sales minus variable cost, right? We have the sales value to be 25. We have our variable cost per unit to be 17, which gives our contribution per unit to be 8. So that's n times 8 minus the fixed cost for next year is going to be 84,000. And we require the same profit of 20,000. Okay, now we can easily figure out the number of units by solving this equation. That is just going to be 20,000 plus 84,000 divided by 8, which gives the number of units to be 13,000. That's the correct answer, which is given in option D. Now we can move towards question number 30. A company wants to sell 50,000 units and achieve a profit of 600,000. It has variable cost of 60 per unit, total fixed overheads of 400,000. We just need to figure out the selling price per unit the company need to charge. Okay, so what we know is number of units times contribution minus fixed cost results in the profit. And we also know that contribution is just the difference between sales and variable cost, right? So what we can write is number of units times sales minus variable cost minus fixed cost results in profit. Now let's substitute the values. The number of units is 50,000. We need to figure out the selling price. We have our variable cost to be 60 per unit. Then we have our fixed overheads to be 400,000. And we're also given the profit amount of 600,000. Now let's solve this equation. That's going to be sales minus variable cost, 600,000. This goes to the other side, that's plus 400,000. And this goes to the other side, that's going to be as a denominator, right? Because multiplication goes to the other side as a division. So that's divided by 50,000. Which means that sales minus 60 is going to be 600,000 plus 400,000 divided by 50,000, which is 20. So our sales value is just going to be 20 plus 60, which results in the selling price to be 80. This is the correct answer, which is given in option D. Alright, this brings us to the end of this paper. If you found this video useful, make sure you like the video and leave a comment below. And make sure you're subscribed to the channel and hit the bell icon so that you do not miss any of these videos in the future. Thank you.